Please, if you have any question, it's very important everybody mute themselves. I don't want to be forced to mute everybody. So you can, if you have anything to say, you want to say, you raise up your hand. There is a icon there for raising up your hand. You raise up your hand and you ask your questions. Please, nobody should just talk so we don't disrupt the flow of the class. So mute yourself. If you have any question, you go to the chat box, you type in the chat box your question, or you raise up your hand and I unmute you and I ask you to unmute yourself and talk. So let's start. Manara, Manara, Manara. Very important. How do you use Manara? How do you stay profitable with Manara? These are the questions we want to find out tonight. These are the questions we want to know. These are the questions we are trying to find out tonight. So pay close attention. Everybody pay close attention to this. If you are just joining us, make yourself comfortable. All right, now, guys, you agree with me that trading is 90. Please mute yourself. Okay, let me mute everybody then. Ask everybody to mute themselves. Okay, I've muted everybody now. I didn't want to do that first. Now, you agree with me that trading is 80% psychology, 20% psychology, and of course, 80% psychology, and the rest is analysis. So we're going to be looking at risk management tonight. We're going to be looking at risk management. We are going to be looking at layering. We are going to be looking at time rule. We are going to be looking at change of direction. We are going to be looking at patience. We are going to be looking at not over-risking and, of course, not over-risking all you've worked for, and also confirmation. So the first one I'm going to take today is risk management. Yes, the first one I'm going to take today is risk management. Now, why am I going to be taking risk management? Because that's the most important part, first and foremost. Risk management. It's very important everybody have the idea of this particular concept, risk management. Please, I'll be very fast because of time, you understand? So when we talk about risk management, what are we trying to talk about? If you cannot hear me, please go to the chat box and say it, but I believe everybody can hear me. Risk management has to do with your risk plan, your plan, how you manage from the word itself, how you manage your risk. How are you managing your risk per trade? It is very important that as a trader, you understand this concept, whether you are new or you are an expert already, a pro already. It's very important you understand this concept about risk management. Very important. Now, let me use the case of when you have $100 account. Now, ladies and gentlemen, if you have $100 account, I do not expect you to use a lot size. I do not expect you to use a lot size that is below, that is above 0.04. No, not 0.04, 0.02 max, just to be safe. 0.02 max. I do not expect you to use that. That means you are going to spread your risk 0.01 in two places. 0.01 in two places. Please bring out your pen and your paper. Probably after this class, a lot of you guys are going to have a different mentality about how you are trading, and you are going to give me testimony, you are going to give me results. I want to see results. Somebody type in it in the comment section. I want to see results in the comment section. Go to the comment section and type results. I want to see results. Like after this call, we must see results. We must start making money. So go to the comment section and type result. Let me know that you guys are following me. So I know I'm not talking to myself alone. Go to the comment section and type result. Okay, Love Emeka, I'm seeing you. Is it just love we have in this? Okay, Adesin Chade, I'm seeing you. Very good. Ayeni Adegoke, I'm seeing you. Nice, nice, nice. Okay, let's move on. Gabriel, I see you. When you trade in, if you have a $100 account, you should not use more than 0.01. You should not use more than 0.01. So basically, the rule of trading is that when you are trading, you should do 2% of your account. Now, if you do 2% of your account, it will show you that that's $2. If you are having a $100 account and you use 2%, it means that you are willing to lose $2 for that particular trade to go. Now, when you are targeting a trade, at least, so you allow your trade to have room to breathe. Let your stop loss be within 15 to 20 pips. I'm going to show you what I mean though. 15 to 20 pips, and let your targets be between 50, or let me say 40 to 60 pips. 40 to 60. That means whatever I'm risking, I'm willing to make ×2 of it. It's very important, guys. It's very important. Very, 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 very important. So if I'm risking 15 to 20 pips, let's say, for example, I'm having Euro USD now. If I place Euro USD 0.01, 2 positions, the stop loss for each of those positions should be 15 to 20 pips. Now, guys, I know Manara gives you a stop loss, but if you notice some of the time, our stop loss are being hit before the trade moves, meaning that Manara calls are always very accurate. But because they don't want you to lose too much, they make the stop loss smaller. You understand? So that you don't lose more. So how you can do it is that you can increase your stop loss, then minimize your risk. Increase your stop loss, minimize your risk. But if you are going to use a tight stop loss, guys, you have to what? Maximize your risk. Do you understand? Like if I'm going to use now 0.4, I cannot be using a stop loss of 5 pips, 7 pips, just like what Manara gives me, because I know that I'm risking high now. But now, if I'm asking you to use a stop loss of 15 to 20 pips, guys, you have to minimize your risk. Please write all these things I'm saying. Minimize your risk. So if I have a $100 account, I do not expect you on each of the trade you are taking to use more than 0.02. That means if I'm trading Euro USD, guys, I expect you to use 0.01 max in 2 places. Yes, in 2 places. If you are trading a $100 account, guys, don't go above this. And use a stop loss of 15 to 20 pips. There's no way that trade wants to go bad. The max amount of money you are going to lose if the trade goes bad is $3 to $4. But if it goes well, the max amount of money you are going to get will be between what? For each of those positions. If I place 0.01, I will be making, since I'm using 40 pips, I will be making either $4, and if it's 60 pips that's my target, I'll be making what? $6. Now calculate that in 2 positions. What is that? You have made a whooping $12 on that trade with a 15 to 20 pip stop loss. That means I'm risking 1 to get 2. Ratio 1 to 2. Your trade should always be between ratio 1 to 2. I repeat, your trade should always be between ratio 1 to 2 or more. Don't place a trade where your stop loss is 15 pips, your take profit is 15 pips. What kind of trade is that? You are gambling. It's nonsense. It's a nonsense kind of trade. So it's very, very important, guys, that you take note of this. That if I'm placing a trade on a $100 account, my stop loss should be what? My position should not be more than 0. Now let's bring it down. What if I have a $50 account, guys? Coach, I have a $50 account. How much should I use on that trade? I have a $50 account. If I have a $50 account, I should not use more than 0.01. More than just 1 position, 0.01. Then my target will be $60. Now that is what I'm making $6 per trade. $6 per trade. Guys, I have 20 something days in a trading month. If I make $6 per trade in 15 trade, where are the mathematics in the house? 6 times 15 is what? 6 times 15 is what? 6 times 15 is $90. I've made $90. I think somebody said it. I've made $90, guys, with risking, that means with $50 in a month out of 30 days, in just 15 days. If I'm getting my this thing right, you understand me? With this, I'm making $90 with my $50. It's all about risking well and not over leveraging. But let me tell you the truth, guys. Let me tell you the truth. Forex will work more when you have more capital. If you have more capital, you are able to risk higher. Now, all this I've been saying is small money, $50, $100. I'm just trying to come down to the common man for those who don't have big capital. But if you have small capital, you can be trading like this, 0.01, target 60 pips or 50 pips. You are making $5, $6 per trade. Out of 30 days, let me use and say that, let me say in 15 days, I will make loss. I will make loss. But out of that 15, let me make 15 days my winning days. Now, if I do 6 times 15 or 5 times 15, I'm making $90 or I'm making $75. Now, like I said, you might not win every day. If you lose half of that money, you are still going to be on a profit of $35. Why? Because you are using 1:2. Your stop loss is never bigger than your take profit. There is no way, if you are managing your risk properly, you are going to lose so much. I showed Damilola my trade result for the week. This week, I didn't really make much profit. But my previous week, I made almost $200. But everything I lost for this week was not even up to $10, meaning I'm still in profit. Why? Because I understand the concept of risk management. Now, let me say another thing that you guys fail to do. Listen to this part very well. Listen to this part. It's very, very important. Listen to this part. Listen to this part very well. Listen to this part. Guys, if you enter a trade, are you with me? And you are making minus $4 on that trade. When you are trading next, and Manara is giving you profits, do not take your profit when you are on plus $2. Do not take your profit when you are on plus $2. Guys, don't try that. Why? Why? Because if you remove two, I said, if you take a trade and you are making minus $4, do not take, let's say the next trade Manara gives you, you take it with your positions and everything. With your positions and everything. Prince Cheta, I think you are the only one. Nobody's complaining that they can't hear me. So maybe switch your location a bit so you can hear me. Nobody is complaining here that they cannot hear me. I think everybody can hear me clearly. If I'm losing minus $4, my next trade Manara gives me, let's say I win, I'm seeing $2, but I know that trade can still go up further. Why should I take $2 when I'm losing $4? You are going to be chasing another $2. You are going to be chasing another $2. So make sure that the money you are making in your next trade, that's why you have to be careful. You select the trade. You don't just jump. The money you are making in your next trade is equivalent to the money you lost or more than the money you lost. That is how you balance the equation. You do not lose a $10 and your next trade, you are happy with $2. You are still having $8. Somebody is owing you $10. He gives you $2. How much is left? $8. Why don't the person give you how much? You go tell the person, say, why you not give me everything when you owe me? Why you give me half? Why you give me half? So why would you want to take small, knowing that you are going to be chasing? Even though it's better you even take 70% of it. If you see that the trade is going to reverse, if the trade is going to reverse, take your profit and go out. So the best thing for you to do is break even. And that takes us to our next topic for today, break even. How do you break even in Forex? I know most of us can play straight here. So let's go to the live chat and see how we can break even. Guys, in case this meeting ends, I will tell you guys, I will send another link. That link that your mentee or whoever invited you to this call, I will send it again so you can rejoin the link again, just in case. I'm just saying. So let's go to Manara itself. Let me go to a particular pair that went well. So guys, this is AUD USD. This is AUD USD. You see why I'm talking about using a 20 pips stop loss. Now, in this case, now the market did not hit our stop loss. If I calculate this pip from here to here now, it's possible this thing is not up to 20 pips yet. It's very possible. Now, what do I mean by break even? When Manara gives you a call, this was AUD USD last week. You can see when it got there, you can see it came down. If you entered from this point, look at this D point now. Let's say you enter from here, where my cursor is, and you see that the trade has gone down, at least has sold up to this place. Look at where my cursor is. From here to here. From here to here. I repeat, from here to here. Let me draw it with line. From here to here. Let me use white. Look at it. I entered from here to here. Because I entered here, I will take my profit. I will break even here. I will break even here. You understand? Because, for example, let's say I'm losing $10 and the market has given me $5. You know I still have $5 to go. But I believe this trade can still hit target 2. I believe this trade can still come because Manara always gives you a target 1 and target 2, guys. I hope we know that. Manara always gives you a target 1 and target 2. Now, you don't want to just exit because of you have made $5. Why? Because you are still losing. You are still losing. You are still owing $5. You need to make sure you are balancing it so that you will not be chasing trades. Guys, it's very important. So when I enter from here and the trade is here, almost as my target 1, even if it's not almost at my target 1, learn to break even. Save your money sharp, sharp. But I will show you another way you can do that. If you enter here, you set your break even here. Why? You don't want to close this trade because you are still owing. You are still chasing the $10. You don't want to take $5 out. You believe Manara will still hit your target 2. As far as Manara will still hit your target 2, break even. Now, how do you break even? Some of you know how to place trade already. The place your market entered, the place you entered from your market, there's always a particular price there. Where you entered from, where you see the market started counting from, when you place a trade, that first number, that 1 point something that is there, when you go to where you'll be seeing your profit, that number that is there, the first number that is there, use that number as your SL. That is, you have made your entry your SL. That is what it means by break even. You have made your entry your SL in the sense that even if the trade goes back, you are still going to be in what? In profit, guys. You are still going to be in profits, or not even profit. You are going to save your capital. You are going to save yourself. So even if the trade comes back, you will not lose because you have already shifted your stop loss to where you entered from. That's how to break even, guys. So it's very, very important you know that concept. So like I said, if you are chasing a trade, you are losing by, you lost $5. When you see that Manara still has target 2, don't take that $2 or $3 is showing you. Break even and wait for it to hit your target 2. Why? Because you are still what? You are still looking for your money that you have lost. Because if you keep owing that money, what assurance do you have that in your next trade that you are entering, you are going to make it back? What assurance do you have? You don't have any assurance. You don't have any assurance. That is why you have to do these things I'm telling you. Very, very important. Now let's go to layering. Let's go to layering. So this is also even, thank God we have this particular chart to help us talk about layering. Now, you understand that Manara always gives you an entry at your point D. Right now, this is your point D. This is your point D. How do you layer? How do you layer? Guys, when Manara exceeds your point D, remember I asked you to use a stop loss of 15 to 20 pips. When Manara exceeds your point D, don't pack all your position at once. At that place, Manara gives you entry. Let's say you want to risk 0.04. Don't put all your 0.04 at once. Chill. You can put 0.02 first. When Manara gives you D as entry. Put 0.02 first. Now, there are two things you are going to wait for. You are going to wait and see whether it exceeds that D or whether it comes back again to retest that D. If it exceeds that D by like 5 pips, you know your stop loss, I told you your stop loss is 15 to 20 pips. I'm going to, after this class, please remind me or whoever sent you or whoever sent you this link, I'm going to share the person a PDF that talks about how to calculate pips. So if you enter there, you'll be able to calculate these pips from here to here to know which one is 15 pips, to know which one is 20 pips. Well, I think most of us, as I'm saying these pips, we don't really understand. So whoever gave you the link, or if you join from me, ask me after this call the PDF that talks about how to calculate pips. I explained everything there, how to do it mathematically. It's very simple and very clear. So imagine your stop loss is 15 pips. When the price moves up by 5 pips, higher than your D, look at your D. If you notice, this market went up. What should you do? You should now place another entry. You know you are risking 0.04. I told you not to put everything at once. You are now going to put 0.02 again up here. You put 0.02 up here. So when you put 0.02 up here, you have one 0.02 here. Probably Manara is also going to take your stop loss. That's why I told you to use 15 to 20 pips. 15 to 20 pips. You will now place another 0.02 so that when this one is in small loss, this one that you have placed up after 5 pips away from the D will start coming down to meet this one that you already placed. That is how to layer. Don't layer all of them at once. If again it goes up by another 5 pips, that's 10 pips. You know your stop loss is 15 pips. You cannot decide to put another small lot, maybe 0.01. Don't be forcing, don't be putting big lots. As it's, the more it's going higher, the more you are reducing your lots. That is how to layer. You do not layer bigger lots. No, don't do that. Layer smaller lots. So if it's going upwards, remember your stop loss is 15 to 20 pips. If it has gone by maybe 7 pips, you layer, or 5 pips. Let's say 5 to 7 pips, you layer. You layer 0.02. If it goes higher again, you will layer 0.01. You will be bringing your lot down. You will not be taking your lot higher. Am I making sense? Because if it sells from that place down, you are still in profit. So why are you going to risk higher? Remember, you are always risking what you can afford to lose. So if it goes higher by 5 pips, you layer another 0.01, 0.02. If it goes another 5 pips, you layer another what? 0.01. As far as you never jam your stop loss, then once you don't reach your 10 pips, 10 pips should be your maximum for layering, except you are using 20 pips stop loss. If you are using 20 pips stop loss, you can layer another 0.01. You can layer another 0.01 at 15 pips because your stop loss is 20 pips. But if your stop loss is 15 pips, which I recommend for most of you, don't layer more than 10 pips. Once you've layered the first 5, layer the second 5. Like now, this is D. It went up. When it went up here by 5 pips, I'll put one up. Let's say it went up again. Let's assume I'm using 15 pips stop loss. I'm not using Manara stop loss. It goes up again by 5. I'll put another one here. Everything, once it wants to retrace, everything will just come down. Like play, you will be in massive profits. Guys, and you know the funny thing? You are not even going to lose too much if it goes bad because the entry here and the entry here and the one you put upward is not the same. The more you go higher, as far as you are using the same stop loss, don't go and shift. Don't be shifting your stop loss, guys. Don't shift your stop loss. That's why I'm asking you to use a stop loss that will allow your trade to breathe, that will give room for the trade to breathe. Don't go and use stop loss. Don't go and be shifting your stop loss as you are layering. You will fuck yourself up because if it keeps going up and you are shifting your stop loss, all your money go once. But use the same Excel, like I said, 15 to 20 pips. After this class, ask me for the PDF. I'll give it to you. You'll learn how to calculate pips. I'll also teach you how to use TradingView to calculate pips. And then you will know when it moves by 5 pips, you will know you put your 0.02. If it goes higher, what did I say? The higher it goes, the lower lot you put. You put another one. Use the same Excel. Use the same Excel. Because even though it goes bad, those ones that you are putting up, they will not incur so much loss. Why? Because the pips you are using will now be smaller. It is the one you first open here. This one you open here, this first place that might be bigger in terms of loss. You don't understand this layering. Please, is there anybody else that do not understand the layering? Please go to the comment section and type, I do not understand. I do not understand anything you have been saying about layering. I've been saying it for like almost 10 minutes now. If you don't understand anything I'm saying about layering, please go to the comment. And if you understand, say I understand. So we'll move on. Please go and type, oh, Love said I don't understand. Who again do not understand? Who again did not understand? I think we are up to like 14, 15 in this group. Please type now. Go to the chat box and say I understand and I don't understand. Go to the chat box. Please let all of us type so we know the direction we are going to move. Okay. Please, Cheta, you have already spoke now. You don't talk already. Please, if you have not traded before or you have not really been using Manara, okay, I understand. If you have not traded before, you're not using Manara, please, you can message me on WhatsApp. I'll have a personal one-on-one Zoom with you and I'll teach you. You understand? This is a general class now. You understand? Let me just explain one more time. I said if you entered here and this thing go up again, put another one here. If you go up again, put another one. But the one you'll be doing is that the more higher it goes, the lower the lot. But you are going to use the same stop loss. This is where Manara gave you entry. Don't use the stop loss Manara gives you. Calculate your own stop loss as 15 to 20 pips. Know how much you are losing. 15 to 20 pips. Put your stop loss. If it goes higher, what do? You put one more position. If it goes higher again by 5 pips, put one more position. Use the same stop loss. Don't adjust the stop loss. Don't adjust it. Don't adjust it. Like I said, if you don't know what pips is, I will send you a PDF that explains how to calculate pips. So that's that for that. Guys, our class remains 3 minutes. And we still have this thing to talk about. We still have like 3 or 4 more. Where's that thing I wrote? We still have some things to talk about. We still have the concept of layering. We've talked about layering. Okay. We still have time rule to talk about. Time rule. We still have change the direction. We still have patience and not over-risking what you've made. So I think in the next class, the next Zoom, I have confirmation. Yes, confirmation. So I'm going to end this Zoom now, and I'm going to send a link again. So just be ready. In another 3 minutes, I'm going to drop another link. Let's say 4 minutes. Stay online. If you miss this Zoom, it's not my own. We are going into a new trading week. Take your time. Stay with me. Even though it's 1 hour, we stay here. Let's finish this thing once and for all. I recorded the class. So for those that say they don't understand layering, I'm very sure when you watch the class again, the recorded version, you are going to understand. So I'm recording the class. I'm recording it. So everything I'm saying is being recorded. So I'm going to send it. If you don't understand, you are going to get it. Trust me. Because you are new to it. Some of you here, maybe you have not started really trading, or even if you have been trading, you have not really been into it. So you need to watch it or hear me say it over and over again. Just like A, B, C, D, you understand? So I'm going to send the recorded version to you. You are going to watch it. So I'm going to end this particular Zoom, and I'm going to resend another link to all the groups. And our mentors here, please send the link I'm going to resend to your mentees. Let's finish the next 40 minutes and let's wrap it up. So far, so good. We've talked about risk management. We've talked about knowing the particular lot size to use. Be very careful of the lot size you are using. If you have a $100 account, you should not use more than 0.02. So imagine now you have a $100 account. What you'll be doing is that as you are going higher, if you have $200, 0.04. If you have $300, 0.06. If you have $400, 0.08. Like that, that's how you'll be knowing the lot sizes to use. And we spoke about layering, how if market is at this D, use a stop loss of 15 to 20 pips. If it goes higher, you layer again. If it goes higher by 5 pips, you layer. I'm going to show you how to use the trading view. So I'm going to end this now, guys. Wait for the second link now that will be dropped, and make sure you join back once you see the link. Thank you very much.